Taxes, everybody's favorite topic, everybody's favorite thing to pay, and definitely easy to understand. Today, we're going to go through the 4 ways that you are taxed in South Carolina. Taxes on what you make, taxes on what you spend, taxes on where you live, and lastly, taxes on what you drive. Happy 250th, America! I'm Will Taylor, a realtor licensed in South Carolina and Georgia. We'll be looking at this through the lens of Beaufort and Jasper County, although the basics are similar throughout the Palmetto State. Along the way, I'm going to reveal some of the exemptions and deductions that you can claim to protect your wallet. And as a quick disclaimer,
I'm a real estate professional, not a licensed accountant or a tax professional.
If you have a specific question about your personal financial portfolio, definitely defer to a CPA, tax professional, or the applicable government entity. First up, income tax. How much do you pay on what you earn? South Carolina has a highly simplified graduated system. You pay 1.99% on taxable income below $30,000 and 5.21% on taxable income above $30,000, minus a $966 standard offset. South Carolina has some great benefits for retirees and the military, one of the many reasons this area has experienced such massive growth in recent years. Retirees. Social Security is 100% exempt. What you get paid from Social Security, South Carolina does not touch a dime of it. General retirement income deduction. If you're below 65 years old, you can deduct up to $3,000 per year of qualifying retirement income. If you're over 65, you can deduct up to $10,000. Additionally, there is an over 65 catch-all deduction. Once a resident hits 65, they get an additional $15,000 deduction against any kind of income, $30,000 if filing jointly. Military exemptions. Beaufort County is proudly home to Parris Island and Merritt Field, meaning that we have an incredibly healthy active duty and retired military presence here. The state extends huge tax benefits to our service members. If you're active duty stationed in South Carolina but claim another state for legal residency, that pay is exempt from South Carolina income tax. If you're retired military, your pension is 100% exempt. Additionally, if you're below 65, you can deduct up to $17,500 of your pension against your other earned income. If you're over 65, this jumps to $30,000. For those that have finished their service but continue to work, this is a fantastic benefit. The next tax, sales tax. How much do you pay on what you spend? The statewide sales tax is 6%. Where I'm from in New York, this was already an immediate tax savings. But down here, county lines matter significantly. In Beaufort County, currently there's no additional percentage levied, so the sales tax is 6%. Jasper County, however, totals to be 9% with a caveat. Jasper County has the base 6%, a 1% local option credit tax, a 1% transportation tax, and a 1% educational capital improvement tax. The caveat, the 1% local option tax acts as a property tax credit. Property owners in Jasper County receive a direct credit back on their property taxes to offset the increase in sales tax that they pay at the store. Up next is property tax. There is a ton of information related to South Carolina property tax, so bear with me as I go through everything. I'm going to break it down into 2 categories, your homes and your vehicles. Yes, you heard that right, your vehicles. First, homes. How much do you pay for where you live? High level. If you're a legal resident, your property tax assessment rate is 4%. If you're a non-resident owner, such as a landlord, a second home, or a vacation property, the assessment rate is 6%. Now, to be completely clear, the 4% and 6% are not your tax rates, they are your assessment rates, and we'll talk about that now. The county takes the home's fair market value, multiplies it by the assessment rate, and then multiplies that by your local millage rate, and then applies any credits to give you your final tax bill. If you're a legal resident, you receive education credits that further lower your tax bill that non-resident owners do not receive. There is a significant savings to be a resident owner. Let's look at 2 examples to help illustrate the difference. Shown on screen is the Beaufort County Property Tax Estimation Calculator. The first example is a $500,000 Bluffton home in a Sun City South appraisal area. As a resident owner, the property tax bill will be about $2,434. As a non-resident owner, the property tax bill will be $7,434. That's a $5,000 difference. Now let's take a look at a $500,000 home in Hardeeville over in Jasper County, which is home to Latitude Margaritaville. Keep in mind that parts of Sun City North and West, as well as Riverton Point, are also in Jasper County, but they may sit in different appraisal areas. As a resident owner, the property tax bill will be about $5,400. As a non-resident owner, the property tax bill will be about $13,080. Jasper County, again, has higher taxes than Beaufort County. Are you sensing a theme here? So the natural question is, how do you ensure that you get the 4% assessment rate? There is an application that you make to the county. To qualify, you need to have your South Carolina driver's license, you need to register your vehicle here, and you need to have filed your South Carolina income taxes. If you do not submit this application, your assessment rate will default to the 6% assessment rate. And yes, you do need to submit all of these. So if you're moving in from out of state, you typically don't have your South Carolina 1040 the year that you move in, meaning that you'll most likely have to submit this application at least twice. Comment below if you've had to do this more than twice. So now that we know that it's cheaper if you're a resident owner, let's talk exemptions. Retirees. The homestead exemption. In South Carolina, if you are over 65 years old or 100% disabled, the first $50,000 of the primary home's market value is exempt from property tax. Meaning, if the county values your home at $500,000, you're only being assessed at $450,000. Military. South Carolina is a big draw for ex-military personnel due to its property tax exemptions. A military veteran who is 100% totally and permanently disabled is 100% exempt from paying property taxes on their primary residence up to 5 acres. So if you find yourself 100% P&T, all the numbers that we discussed before do not apply to you. Additionally, this benefit is in effect the year that the disability occurs and carries to a surviving spouse. The exemption does not scale based on P&T percentage. If you're 60% P&T, you do not get a 60% exemption. It's strictly an all or nothing benefit for 100% P&T. Lastly, vehicles. How much do you pay for what you drive? This is a surprise for folks that move in from out of state and is definitely different from New York. In South Carolina, you pay property taxes on vehicles, cars, RVs, boats, etc. Cars are automatically hit with a 6% assessment rate and must be paid every single year. Unlike your home, none of these vehicle taxes qualify for school operating credits. RVs and boats are actually taxed even higher, generally 10.5%. But for brevity, I'm not going to discuss those, but it's something that you need to be aware of. In Bluffton, if you're registering a $40,000 car, your yearly taxes are going to be around $600. In Hardyville, that same car would be just over $1,000. Again, Beaufort County has cheaper taxes than Jasper County. Keep in mind there are some additional one-time fees for registering a car if you are moving in from out of state, but your standard vehicle valuations do change each year. I've had the same car for about 4 years, and in my experience, my property tax bill has been going down each year as a result of depreciation. Exemptions. The high mileage discount exemption. If a vehicle has higher than average mile for its model year, the owner can apply for a high mileage reduction. However, you need to know that this is not automatic. You have to manually apply for this discount with the county auditor every single year before you pay your registration. For retirees and military. Disabled retirees and 100% P&T veterans can qualify for a complete exemption from vehicle property taxes altogether. Specifically, 100% P&T veterans get a complete property tax exemption for up to 2 personal vehicles. And we've made it.
Nice.
You have officially mastered the 4 main ways the government takes your money down here in the Lowcountry. Let me know in the comments below, how do you feel about these local and state taxes? Does the cheap real estate tax make up for the annual vehicle sticker tax? I'm Will Taylor. Thank you so much for watching, and I'll see you in the next video.